Welcome to today's video, where we will explore the key differences between Treasury money market funds and municipal bond funds to help you decide the best place to keep your cash in a taxable brokerage account. Let's dive right in. Now let's talk about Treasury money market funds. These funds have two major advantages. They are exempt from state and local taxes, and they offer a competitive yield. For example, a fund offering a 4.72% annual yield, if you're in a 22% federal tax bracket, would give you an after-tax yield of about 3.68%. On the other hand, municipal bond funds may be an excellent option for those looking for double tax benefits, as they can be exempt from both federal and state income taxes. However, they tend to have lower yields compared to Treasury funds. For instance, with a 2.61% annual yield, and considering California's 9.33% state tax rate, the 7-day yield is 2.59%. Several key considerations can guide your decision. Firstly, your federal and state tax rates play a huge role. The higher your tax bracket, the more attractive municipal bonds might appear. Secondly, always compare the current yields of Treasury funds versus municipal bonds. Lastly, perform calculations to weigh the after-tax yield of Treasury funds against the tax-exempt yield of municipal bonds. Here's a simple rule of thumb to keep in mind. Treasury funds generally offer better returns. However, if you are in a high tax bracket, the tax advantages from municipal bonds could potentially outweigh the downside of their lower yields. Let's take a moment for a quick quiz. What is the potential benefit of municipal bond funds over Treasury money market funds? Is it A, higher yields, B, exemption from federal and state taxes, C, lower risk, or D, greater liquidity? You may pause the video now to think about the answer. We will discuss the answer in the next section. The correct answer is B, exemption from federal and state taxes. Municipal bond funds are indeed tax exempt, which can be particularly advantageous for investors in higher tax brackets. In conclusion, when choosing where to hold your cash, consider that Treasury money market funds offer competitive yields and are state and locally tax exempt. In contrast, municipal bond funds offer double tax benefits but often yield lower returns. Your tax bracket significantly impacts which option is best, so comparing after-tax returns is essential. Thank you for watching our video today. Please don't forget to like, share, and subscribe to our channel. We would love to hear your thoughts in the comments below.